Hello. Okay, good day everyone. Thank you for coming into this YouTube channel, Trade Live with Precise Trader. Uh, Today is 10th of July and this is a Asian session. Okay, do take note of the risk disclosure. Day trading in foreign exchange is risky. Past results are not indicative of future returns. The content on this webinar is mainly educational purpose. Use your information entirely at your own risk, and you must assess your risk with your trade of your trade with your broker before you put in your trades. Okay, with that we move on to our live trades and live analysis. Yesterday was FOMC minutes, and they said more hawkish than expected is good for currency. Frequency 8 times per year, 3 weeks after the federal funds rate is announced. So that means to say that most officials see rate cuts coming. Okay, let's read that. Federal Reserve diverged from June meeting aggressively that they will be willing to cut rates, split between concerns over tariff-fueled inflation and signs of labor market weakness and economic strength. Minutes from June 17-18 released Wednesday showed that the policy largely held to wait and see position for future rate moves. Okay, the meeting ended to hold the central bank's borrowing rate. So that means sooner or later, I think we can expect the cut, but but I think we have to wait for more data to come in. Okay, today's data that is going to be out is U.S. Unemployment claims. Okay, then tomorrow we have, in fact, FOMC member is giving a talk early in the morning. Then tomorrow is pound GDP and Canadian employment change and unemployment rate. So overall, I think there is not much US data to digest. So let's move on. Okay, another thing I want to tell you is, okay, we are today onwards, okay, we are planning to change our style of trading, okay, because the reason being is I feel we were trying to do scalping all this while, but unfortunately most of the time we are getting caught in the wrong side, or either like early entry, late entry, uh, sometimes we miss that opportunity, so on and so forth. So now what we are going to do from today is we are going to change our style and our approach to the market. Okay, so what we are saying is, okay, our style is going to be basically, of course, we need to identify the trend. Okay, after identifying the trend, next we need to see uh, whether the market is in a range, whether this market is in a trend on a 15-minute, or whether this is a correction. We need to identify that. So once we identify that, I think we will get a very clear plan how to go about doing things and how can we move on. And at the same time, we are going to hold the trade uh, at least a few hours. Okay, at least a few hours, and we need to, at the same time, we also need to stay in the trade when we are right and the market moves as we expected. Okay, so do take note that we need to do all this before we get into the trade, and we will dictate our plan and our execution very precisely, so at least we can be pretty clear, okay, how the trade is going to flow and how we can move into. So there's a few conditions that is uh, needed to be applied. Okay, a few conditions. Of course, I'm going to lay down the conditions and the terms, so at least you are aware that this is going to be, and we are looking at the market with the precise uh, movement. So in the event if we are wrong, then of course we need to take action on this market. Okay, so let's start off with euro. Okay, let's start off with euro. Okay, the the trend here is, okay, right now, okay, we're looking at daily turning down. Okay, daily turning down. So this is going to be a daily turning down, but within a congestion. Okay, within a congestion from 11790 and 11680. So if this is within a congestion, that means what is telling us is overall we should see the price breaking lower, but as of now we should see the price moving up, but it should be limited upside, then we should see the price turning down. So this is based on the daily. So if we look into the hourly, okay, hourly is telling us that this is within the range 11750 and 11685, and eventually this low is expected to break, and if it breaks we should see the price moving towards 11660. Okay, 11660. Yeah, about 11660. Okay, so we need to also see that the price, see whether the high is seen. So the high, in order for the high to be seen, we always need to pay attention to the PT hook. Okay, the PT hook is either this level, which is 113, 11735, or 11730. So looking at this, okay, we have already taken a trade which is selling at 11742. So what we are going to do is, okay, we are betting that this 11750 is going to be the high. So we will go for, usually we'll try to go for three types of entries. Okay, three types of entries. One is a projected entry, then one is a best entry, another one is a add-on entry. Then we will try to release one by one. Okay, so based on this we need to know, okay, we need to know whether have we seen the high. Okay, there is a possibility that this market is, hold on, okay, this is within this channel. So we should be getting our target at 1660, which is just now I did say, and right now this is near the channel, so we need to put a stop above this channel. So then we should see the price moving lower, and our TP is either 117 breaks to C, and we try to exit at 11760. So how can we play the game? Okay, we have already shorted at 11740. So we are going to go for another order. Okay, stop sell. Okay, stop sell. $30, $60, 116.90. So we have a sell order. So this is, we are only going to go for first entry and add-on entry. So of course the best entry would be we in the event, okay, in the event this gets stopped out, then probably we will try to go for one more trade near 117.75. Okay, 117.75 should be quite good. So we will try to go for a sell okay, we'll put it as 117.80, and we should not see the price going above 117.90. Okay. So we have 3 entries. So we'll try to go steady with the trade and see how this is being managed. And always remember, when the second order gets filled, the first order has to be taken action. That means reduce the price, reduce the stop loss, and so on and so forth. Okay, so we have done for the euro. So now we'll try to go for the pound. Okay, when we look into the pound, we are seeing this. This is the trend is actually, this is a correction down. You know, it's already down on the daily. Okay, it's already down on the daily, but a congestion on the on the daily. So the range is between, we can say the lower part is 135.30 and the higher is 36.45. So we should be looking for uh, uh, the price action on the hourly. So the hourly, this is within a range. So what we can do is, remember, we got to put our stop above 36.55. Okay, let me double check that. Yeah, 36.55. So we can go for a sell at market. Then we put 36.55. Then we can go for another order to sell at 36.30 or 35. Okay, so let's do that. Okay, selling one at market. This is the stop loss. We are going to put at 36.55, and TP, we'll put it as 35.30 as of now, and later we'll do the adjustments. Okay, then we are going to put another best entry. Okay, best entry, try to sell. Okay, sell at 36.35, and this is 65 stop, and we'll put it as 35.60 for the time being. Then later we will do the adjustment. Okay, so we have one entry, best entry, and one is a market entry. Then we are going to go for another add-on entry. Okay, add-on entry should be the stop sell at 35.90. Okay, 35.90, stop at 36.25, and TP is, okay, we need to see the break of these two levels. Okay, this two, in fact, this 1, 2, 3 levels, then we may see the price heading towards 35.05. So I think we will go for a conservative TP, which is still 35.30. Okay, so we are going to go for a stop sell. $35.90, 36.25, and 35.35. Okay, so we have this order. Okay, so we have 3 orders. Okay, one is a add-on, one is a best entry, and one is a near the market entry. Okay, but of course this would all depend on the market conditions. Okay, so I'll repeat, for those of you who have just joined. Okay, today onwards our approach is going to be slightly different. Okay, I'm just letting you know, because you see, all this while what we were doing was we were trying to go for scalping trade, and unfortunately this doesn't work, because every time, when we are, because the problem is, I'll tell you where is the problem. Okay, the main problem is we are not monitoring the market 24/7. Okay, not 24/7, 24/5. Okay, meaning it's only 5 days. Yeah, so sometimes when we take the trade, we tend to miss the opportunity, or the price, where we wanted to take. This has already been traded and market starting to turn, so we try to get back on track with the least, and every time we either we make less or we miss the opportunity. Okay, so now what we are going to do now from today onwards is, of course, we need to practice this few sessions. Then once we are through, then we can maintain that and move on to the right directions and the right channel. Okay, how we are going to trade is, okay, we are going to trade based on, you see, of course the trend is very important. The trend is, we need to define the trend on the time frame. Okay, like for instance, okay, let's discuss the dollar yen, because since pound I've already done, so let's discuss on the dollar yen. Okay, the dollar yen, okay, the trend is, you see, actually this is in a uptrend. Okay, this is an uptrend on the daily. Okay, this is uptrend on the daily. I wouldn't say uptrend, but now it's congestion up. Okay, we'll put it as congestion up. Okay, weekly this is also congestion up, daily is also congestion up, and we should be seeing on the hourly. Okay, hourly is, this is the limited up, or market is either limited up or turning down. So this is what we call a PT hook. So in order for the price to remain on the direction of the trend, this is the maximum it can withstand. Okay, so in fact this was yesterday night, we gave an order to buy at 145.75, but even we put 75, I think we wouldn't have gotten this price. Okay, so now looking at this, now market has already started turning. Okay, so the moment once the price is above the PT hook is the indication that the price has already started turning up, and we should be in this trade. Okay, so now what we are going to do is we are going to go for another buy. We already bought. Okay, we already bought, so we are going to go for a buy, another buy at 46.05, and another one at 45.90. Okay, let's say we'll see extension, yeah, about 45.90, and stop below this level. And every time when we are getting into the trade, okay, remember we need to have at least two positions, or two two or three. Okay, so we already long dollar yen at 46.01, so we are trying to go for another entry. We have charged. So we have just entered market one, and we have also entered a buy at 46.01. So we have one more order on the dollar yen, which is 45.90. Okay, so what I'm trying to tell you is no sound. Are you able to see, hear me? Hello? 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 Can you hear me? Hello? Yeah. Okay, okay. From today onwards, okay, as I told you, we are going to change our approach. Okay, thank you for responding. Okay, today onwards, we are going to change our our approach. Okay, we first of all, previously what we were doing is, I'll just said that previously we were concentrating on scalping. Okay, most of the time, and every time when we take a trade, we get caught. Either we miss that opportunity, or we get a late entry, or we get stopped out, because we try chasing the market. So most of the time we are doing the wrong thing, because the reason is because we are not monitoring the market 24/5. Meaning to say that, just sit in front of the screen, and every time when the move comes in, we are not trying to take the trade and respond. So what we have decided is, okay, now we are going to go on, our approach is going to be slightly different. We are going to go, and I'm going to mention maybe on the comment, okay, I'll do a mention on the comment whether this is a range trade, whether this is a correction trade, or whether this is a uh, trending trade, and so at least you know what is to be expected. So what okay, let me see whether I can put in this comment. Okay, I can add on. Okay, so now, okay, let's say we are looking at let's do one first. Let's do the dollar yen first. Okay, dollar yen, since we already just got into the trade. Okay, this trade this is going to be uh, okay, there is two possibilities. There is two possibilities on this. If I mean, as of now, we still feel that the high is yet to be seen. Okay, the high is yet to be seen. So, which means to say this high has to break, and we should see the price heading towards 4760 and 4805. Okay, so this is one possibility. So now we have taken this trade based on a correction on the 15 minute. Okay, let's see the hourly. Let's see the hourly. Yeah, hourly is still intact. Okay, hourly is still intact, and we have yet to see the high. So this correction is over on the hourly. High is yet to be seen, and we are yet to see the high. Okay, so let me give you the let me try giving the comment. Okay, no, how come this is not giving you the allowing? Okay, hold on. Okay, I think, okay, I'm so sorry. I think the comment can be only put in when we are about to, before entering the trade. After entering, the comment cannot be placed in. Okay, so I think maybe a later session I'll try to implement that. Okay, so at least we have a very clear understanding what trade is it and how we are going to manage the trade. So now for this, if let's say I'm going to give you a comment. So this is the hourly correction is over, correction down is over. So the daily uptrend is still intact, and the high is yet to be seen, and we confirm that the correction is over because this market has already started turning up and cleared the PT hook on the 15 minute. So we got to wait to see whether the price is moving as we expected, and we'll try to manage the trade and hold the trade until we exit with the profit. So there's two ways which we can trade this. One is we go for a conservative profit, which is 46 80. Then another one is 47 60. So we'll go for two conservative one a conservative target, another one at aggressive target. So that means to say, so this one is 4680, we try to exit. Then another one we'll try to go for a aggressive TP, which is 4760. So we have two types of exits. One is a conservative and one is a aggressive target. Okay, the pound I think my also given one is this is within the range, so I think that I've already given. The euro I've not given the target. Okay, the one is a conservative target, which is 11690. Another one is within the range. Then the third one, of course, we can say, if let's say the 65 breaks, then we can see price moving towards 11580. So that is going to be a, a very very aggressive target. So let's see how this trade comes about. Okay, so I repeat, so today onwards our approach is going to be a bit different. We are going to hold the trade, we are going to manage the trade, and we are trying to enter and exit on three different type. One is, we call it box to box, which we called from the valley to peak. Then another one is a range or congestion. Congestion meaning to say that within the range, especially when the price is caught in the range, then we keep on adding, and reducing, and until the price target is reached. Okay, so now let's work on the gold. Okay, the gold right now we are shorted two. Okay, two. One is 21.8, another one is a stop sell, which is 19.5, and we were trying to sell one more, which is 23 point. Actually we put 23.8 but couldn't get, then we finally have to lower it. So now let's go a detailed analysis on the gold. Okay, the gold looks like, first we'll try to go on the weekly. Okay, weekly is trading below the open, which means to say that this is weekly in a congestion with the downside view. Okay, this is a congestion with the downside view. Daily is, we are seeing a congestion, but yesterday was some strength and today it was showing some strength. So this is still a congestion, and I would still say that this is congestion with a downside view on the daily. Then when we look into hourly, okay, hourly, this is also in a congestion. Okay, meaning to say that the price should not be going above 30. In fact, yesterday already I clearly explained that this price should not go above 30 if we are right, and yeah, 30 to 33, definitely should be below that. It should not go above that level. So now when we come into 15 minutes finally, okay, the pattern is showing is market is struggling to go up, okay, which is indicating that the price should be turning down soon, which is already showing sign of turning down. So then if we were to draw a channel, this is within this channel. Okay, so first time, second time tested, third time tested, fourth time tested, fifth time tested. So this is going to be a very strong channel. So the same thing, our TP, we should be looking somewhere near 75. Okay, somewhere near 75 if we are right that this market is in this pattern. But of course the price can come here 3306, then bounce up. Okay, the possibility is 3306 bounce up, or it can be an extension towards 3300 or 3301, then bounce up. So if we are going to trade this, so that's where we need to have two types of price target. Okay, one is a conservative and another one is aggressive. Okay, aggressive meaning to say the final target. So now we have two entries. Okay, we have two entries. So one entry we will try to exit at 3301, and another we will try to exit either at 3285 or lower, which is 3275. So that should be our game plan. Okay, so let's change this target. So we have two targets. So the first in first out we apply, that means the first trade we have taken, we'll try to exit with a profit. Okay, then the second in second out, okay, we will try to exit at 3285, okay, 85 or 86 half. So we have two targets, okay, two targets. We let it work, then we manage the trade, and just in case, okay, the price breaks and hit our stop, then we got to go for a re-entry again. Okay, of course we have a re-entry, which is we have one more best entry, and we also have one more re-entry. So all in all, I think the gold trades is well protected, and we should be able to get this in the right directions, and we should be able to get the maximum out it. So I repeat, those people who are joining us late, okay, just joined in. Okay, I just repeat, from today I think we are changing our approach, because all this while we were doing so-called scalping, So the problem we realized was either we are missing big opportunity, or either we are making a minimum profit, or either we are getting stopped out because we are trying to chase the high and low. So now what we have decided is, okay, we will just try to have one view. Okay, one view, stick to the view, and we have one alternate view. That view has to be done in case of emergency. Okay, in case of in case like we are sitting in the wrong side, then probably we have to do that. And also try to be in the trade. Okay, try to be in the trade, try to exit at a specific price levels, rather than just blindly close a profit, as we feel like, so what is happening is we are not having a quality trade. So we are trying to go on the quality. So hopefully we try to get a few rounds, accurately, so then we can stick to that, and we keep moving, progress on this. So then we'll try to adjust our the volume. Okay, because right now I'm just putting the same volume, because I've not really fine-tuned the system yet. Okay, so I think we should be doing this trade, and like as I said, we would be focusing on pound, euro, yen, and gold. Okay, this four, plus index futures. Okay, like Dow Jones, Nasdaq. Then morning also we are trying to implement Hang Seng, Nikkei. Then also in the Europe session we might do. I'm not sure whether FTSE, but most likely DAX. So we have a versatile of products and versatile of things, but of course you can decide. Okay, you can decide what you want to focus. Okay, I just repeat one more time for those of you who have just joined. Okay, from today onwards, our approach is going to be different. Okay, we are no more doing scalping. Okay, we are no more doing scalping. We want to go quality trading. Then we also want to have a view very precisely, that means I'll tell you what is the view or very precisely, then we stick to the view unless we are wrong. Okay, the criteria is the view can be wrong, and I also there is some checklist involved. Okay, that means I'll tell you whether we are in the same zone, sorry, safe zone or danger zone, you know. So when I said safe zone or danger zone, looking at the market, you should know whether you are in the same safe zone or danger zone, whether do you want to realize your profit or whether you want to close and wait for better entry levels. There are few checks involved. So when you take the trade, then you do all these checks. That should give you a comfort zone, you know, whether we are in the right direction or wrong direction, and slowly we try to hold the trades until the target is reached. So try to hold on to the trade until the target is reached, unless you have a reason to do it. Then again, when the price starts to, when you close it earlier, then try to go for re-entry. So in that word, you know, we can get the maximum from the market when we are right, and we lose the minimum when we are wrong. Okay, so now I'm going to show you what are the checks needed to see whether we are in the comfort zone. Okay, so the first thing we need to do is, okay, let's talk about gold since our focus is on the gold. Okay, see whether we are right. So we have two entries. So what we can do is, our target we have given is two targets. Okay, this is one is a conservative target 3301. This is an aggressive target, and try to hold the trade until that, you know, so that would be the best thing to do. Then of course our view is wrong. Okay, that is, you should not be hesitating in changing directions once the price goes against you, or once the price is not in your favor. So let's go and discuss in detail the gold, whether are we holding this, and see all this. Okay, first of all, excuse me, we need to know the trend very precisely. Okay, the trend is very precisely. So if we start, okay, let's start from fresh. Okay, we are doing a analysis on the gold. Okay, let's start this fresh. Okay, now check on, remember I told you we should be, a simple check is to see whether the market is within a trading band, and whether the price is trading below the open or above the open. That is a simple check. So when you do this check right now, when you look into this weekly, this is trading below the open, which indicates that this market is weak as long as the price is trading below 35. Okay, 3335, which is the opening for the week. So now this is the simple check. First is opening. Then the next thing is, you try to look for your current high. Okay, current high, to see whether are they equal or below or greater. So since I'm going for a sell, this is lower high, which means to say that, okay, this check is also giving me a comfortable result based on the weekly. Okay, so this is two checks which is I feel I'm comfortable to hold a sell. But when you go on to the daily, okay, so you see this is a tricky part here. The daily, this is trading above the previous day high, but within a trading band of the one more day before, and this is within. So chances are this can fail from an extension of this level, which is precisely the market turned down at or rejected at 26. So which means to say this on the daily, this the high is rejected, and we are seeing the price uh, uh, turning down. So now when we look, the third thing we need to see is, okay, remember current high, current opening, or different time frame opening. Then when we look into the 6 hour chart, okay, this is also telling this is within the trading range. So that means as long as the price doesn't go above 30, this price should be turning down, and we are expecting. And right now this market is already starting to turn, and we have only have 30 more minutes to for this time to end, because this is started at 6 o'clock Singapore time, SGT time. So if we are right, if this market closes deep near the open, which is 13 or 14, the next 6 hours should be a down move, and we should see the price breaking this 3308 and further down towards 3301 and so on and so forth. But we have to manage the trade. Okay, we have to manage the trade. Okay, the first signal you see the price is giving a turn is, okay, we call it a short-term high or short-term low. That means short-term high meaning to say whether have we seen the high. Short-term low is whether have we seen the low. Okay, the condition for a short-term high is market pushing higher. We have to take the highest high, okay, highest high, which is this level, and the condition is the price should be having lower highs on both sides of the highest high, or one equal and one lower high, okay, which is this, both conditions is applicable. So when we have equal high and one lower high, and the rule is the price has to close, that means the current bar has to close below this. That is the first condition to see that the market is making a turn. The second condition is the price has to close below this the previous low, and this is what we call a confirmation. Once this is seen, okay, that means to say that we have already seen the top, and right now we can be comfortably holding a sell and on the 15-minute. So the next thing we got to take note is we have to see a break of this low. If it breaks, then we can be pretty sure. And also at the same time, when we pay attention to the RSI and stochastic, this is also should give us the signal. So when we look into all this thing, okay, now I'm comfortable that I've seen the high, and if you ask me what is the probability, I would say this checks all I can say about 80 to 90% high probability that you are in the right directions once you see this candle closes below this low. But there can be cases whereby it can close, then quickly turn up, then break the high. Okay, that is where if that happens, then we are unlucky. Then we should be just pay the price, and we just try to re-enter again, and we just have to stick to the rules. Okay, so like the checks I told you, first is the opening price principle. We call it opening above or below the high and low. That's one. Second is the current high. Compare the current high with the previous high. Okay, it can be any time frame. It can be daily, it can be hourly, it can be even 15-minute. Okay, it doesn't bother, but you should be looking for a a valid check. Okay, so that is the third. Then the next thing is we need to see the RSI. Okay, RSI breaking below the moving average. Okay, and we should see the price, the RSI should be coming below the moving average, which is normally we use a 21 moving average. Then the same thing for stochastic, it should cross and give us the signal that this market is already turning. So this is another check which we try to do. Then the fourth check is we just look at 1 minute, okay, 1 minute chart for precise entry, exit levels and do. So, and we need to see the moving average converging and the price should be below the moving average. This is a fantastic signal of a market giving a turn. Okay, this is quite a reliable and fantastic signal. So right now, this on the 1 minute, because the 1 minute is this lowest time we can use. Okay, so right now this is showing that this market, the moving average converges and price is trading below the moving average, which is an indication this market has already turned. Then one more check, we call it a polarity change, okay, or sentiment change, or different people will use different terms. Okay, so that is when the price breaks the previous low or support, and when it retests, as long as the price is not able to break that high, that tells you that this has got a huge selling pressure. So which here, this is a polarity change here. Okay, polarity change here, polarity change here. You see here, because this is a low, price broke this low and no strength to retest this low or this high. So this is the indication that this market is turning and is showing selling, and we can stay in the trade comfortably, not to get panic. Okay, now we have we have a entry. Okay, we have an entry at 23.2. Okay, I think we have a entry at 23.2, and as of now we are still betting that this is the high. Okay, so now what we can do now is, this is where is expected from you. Okay, now you are in the driver's seat. Okay, you are in the driver's seat. We have two entries. One is 21.8. So we have a, remember always when we revise the stop losses, we should be revising in such a way that we should not get out of the trade unnecessarily when we are in the right direction, and when we are especially we have a plan and we are making money. Try not to close it unnecessarily unless if there is a need, or unless you feel that okay, you want to go for a partial profit, you may want to do so. This is all your individual decisions. Okay, and the only clue, okay, the only clue that tells you that this market, okay, is reversing is usually we can pay attention to 1 minute or 15 minute. So like 15 minute we need to see together with the time that is trading. So if you see, as long as the price doesn't go above 21.5, okay, 21.5, because this is your 15-minute high and this is your previous low. Okay, 21.5, I would still want to hold this trade, sell, and I may want to go for a re-entry, uh, or I can play different strategy. So now I have already have two open. So what I'm going to do now is I'm going to go for another add-on entry, which is at 20 half 20 half, and for that I'll put a stop at 24. There's a $3.50 risk. Then I would still wait to see whether this low breaks, and if it breaks, then I may want to continue holding on to the trade until I clear all the trades, with a profit. So that means this is your maximum profit you can get from this move. So here, okay, what I'm going to do, okay, I have a 23.2, okay, selling. So that one I may want to raise it to 24.5. Okay, 24.5. That is in the event some spike happens, then I get this spike happens, then I may want to be in the trade. Then like as I told you, because this is the time is going to finish in another 15 minutes. So I'll go for another entry. Okay, usually maximum, I'm telling you, maximum we hold 3 to 4 entries, not more than that. Okay, that will be over trading. So we'll try to go for maximum 3 entries. So this 20 half, 24, and this one I can also enter at exit at 33302. So I have a new order, okay, selling at, because I've already caught the move. I already caught the move. I already feel that the high is seen. So I'm just trying to get the maximum from the market. If I'm right, of course, if I'm wrong, then I got to pay the price. Okay, so this is up to you. This is my approach. Okay, this is up to you to decide whether do you want to do whether you want to follow this style or you do your own style, then stick to your plan. Okay, so the difference here, you see here we have a 23 half, we are putting a stop. Okay, so then we sell for a 24 half. I think it doesn't make sense. Okay, because we are getting stopped out at this, then we are going for a sell again at 24 half. So this doesn't make sense. So either we got to reduce this, then you go for 24 half selling, or you cancel this. So this is what you have to do. I mean, when we trade, I think we got to trade a bit smart. So what I'm going to do is, so probably this one I want to reduce it to 22 half. Okay, reduce it to 22 half, and this one is also maybe 23 or 23 half. So then at least I got $2 on this, so we feel, so this is I think it doesn't make sense, because we also have a 30 half selling. I think we might as well cancel this. Okay, we cancel this and we only put only this trade. You see how we are managing risk, so we need to be, see, when you put your stop loss level, okay, give me a minute, okay. Now I think I want to enter this 19.8. Okay, so I'm going for a third entry. Okay, the reason being is uh, two things. One is the time is going to get finished. Okay, that is one. Okay, with another 15 minutes, this is going to get this time is going to end. Then another thing is we are uh, seeing that 15-minute. Okay, 15-minute is in a congestion. Okay, hold on, I think I missed it again. Okay, try to enter at 19. Okay, the 15-minute is in a congestion. Okay, you see here, your 15-minute is a congestion, which means to say the next 15-minute we should be seeing the price breaking the low if we are right. Okay, so I think I missed that 19 again. You see here, it was quick. It was, see, our reaction time must be very fast, otherwise, we don't get into the trade, and sometimes we miss. This is the painful process which we should be having. That means, like, if we are right, but we did not capitalize on the move, and it can be very painful. Okay, so now the reason why I entered this 19 is for those of you who may not have entered our entry, so you may want to join in, so that is another way of doing things. Okay, so I think we missed it. Once it breaks the previous low, the 15-minute low, then I would cancel the 19 selling, because I'm expecting this price to break lower. Okay, so as of now, we are holding two entries on the gold. We are trying to enter the third one. I'm not sure whether I should be selling at market, because I'm already holding the trade. So if I'm not, then probably I may want to go on the market. But since I'm already holding the trade, I'll just wait. Okay, I'll just wait, and we'll just try to manage. I think we are also shorted Dow Jones and Nasdaq, which also I think we may want to look for an add-on entry. So that is, we may want to do it at a later stage. But let's see whether we get this 19. It's getting filled. Looks like. So we have another 10 more minutes left, okay, for this the 6 hour time to finish. So this is within the congestion, but this is rejected. So there is a high probability that this might be the high for the today. There's a high probability, but of course, nothing is certain until we exit with a profit, and we exit. So there's nothing is certain. Okay, that is the thing you got to take note. Any questions? While we are waiting, because I just want to enter this one more trade. I'm just trying to enter, but the only thing we can lower it is probably 18.7 or 18.5. Then we do, but if we lower it to 18.5, then the stop has to be at 22. Okay, early on we gave a 24 stop. So what we will do is we will try to reduce it to 18 one last time, then bring it to 22 stop. It's only about $3.50 stop. So if we missed again, then I don't think I want to chase that market anymore. But I already have two open positions, so I think I'm still comfortable with what is happening now. Okay, so now can you any questions? If you have, you let me know. For those of you who have just joined, I just want to repeat, today onwards we are changing our approach and our style. Okay, and we are no more doing scalping anymore. Okay, because we feel that doing scalping is only a waste of time, and because we are not sitting in front of the screen 24/5. So we got to get ourselves prepared for the market turning points. So that is one way which we can do that. Then we identify the trend, we identify the trade by whether this is in a congestion. Of course, the congestion, we have to be very precise on the time. So congestion like on the 120, or congestion on the 360, or congestion on the daily D, so on and so forth. So once we identify that, then we can be crystal clear on what we are going to do and how we are going to go about. Okay, so we we are seeing this right now. I think we missed again. You see, we wanted to sell at 19.5. At that time I wanted to do, I think I should have entered at market. So this is the move. So let's wait to see where it is closing because this closing is very critical, because the reason is this is the last 15 minutes. Always remember, the last 15 minutes and the first 15 minutes of the time is very critical. So this, if it can come down a bit, another 5-6 minutes, close near the open, then that would be great, because this is a doji. Then we expect the price to come down in the next time frame. But until then, nothing is guaranteed or nothing is certain. So always remember, until the trade, whenever, I mean, the confidence level can be at the peak or at the low. This is all your decision and your approach. Okay, but always remember that until the profit is realized, until you book in your profit, that money doesn't belong to you, it belongs to the market. Okay, so you must understand that fact. Okay, any questions? Okay, I think we are in the right track. Everything seems to move in the right direction, but I just want to see if another 5 minutes of weakness would really give us the confidence, because like as I told you, the first 15 minutes and the last 15 minutes is very important. Okay, any questions while we are waiting? Another got 4 more minutes. I mean, of course, I can give more orders, but I don't think I want to take that risk because we are already, uh, got too many times stopped out. Because every time, I think sometimes when we are unlucky, I think we are bound to face this. Okay, I think this market is giving us a good signal as like what we are expecting. So another 4 minutes of weakness and try to close near 14. Okay, that would be a great, that would be a great signal. So let's wait to see. Okay, while we are waiting, let's look at pound yen. Okay, I think the pound yen seems to so this is a congestion on the daily and correction or turning up on the uh, hourly. Okay, which means to say I think the dollar yen should be very weak. Okay, the dollar yen should be very weak because the pound is weak and the pound yen can go higher, which means to say that the dollar yen is very weak. So we should have bought on this, but we are already into dollar yen trade. So I think we don't have to bother about this. Okay, still we have another 2 more minutes. Let's see what happens and the closing. So at least then the next 15 minutes we can try to see whether we want to change our entry. It was a real waste. I mean, if you can get that 19 half, that would have been a good move. Okay, the 2 hours is showing weakness. This is trading below the previous uh, 120 low. So which is a good sign. Okay, which is a good sign, and it's still coming down. Okay, I don't want to take profit now. I just want to wait to see. Since the market has already broke the low. Okay, so what we can do is the add-on entry 18 half. Okay, I just want to change the time. Okay, meaning to say I just want to give another 1 to 2 hours. Okay, that means put it as 9, and I still want to go with this trade. I still want to go with this trade to see whether we are able to do that. Okay, then this one I think all the stop loss is I want to reduce further, because this is 15. So the stop loss, I think 22 is a 21 half, 22 is a good level. Okay, 21 half, 22, 22 half, so that is a good level. And always remember, when we put a stop loss, try not to put the same levels, because sometimes when we get stopped out and the market starts to turn or reverse, then we may get the thing move, miss the opportunity unnecessarily. Okay, sorry. So let's see this. Okay, we are seeing a weakness. So now your current high should not be, remember I told you the first 15 minutes is important. Okay, so if this is the high, sorry, if this is the low, this 15-minute, yeah, it should not go above 20. Okay, 20 or 19 half. Okay, so let's wait to see. Then I'll see you all again later, and good luck to you guys, and see let's how this trade works, then we would see. Okay, thank you, see you again.